All right, what's up, guys? So welcome to the first episode of LIMO Talk.
Sharp as always.
I dressed up for you guys.
All right.
So,
We're going to have some fun here. You want to hop on in?
Yeah, let's do this.
All right.
All right, guys. So welcome to our first episode of LIMO Talk. We have James, the master CPA, and so he is our CPA, and he's a wizard at what he does.
All right, yeah, I've been a CPA for 25 years.
Awesome.
I've worked for public accounting firms. I've worked for a small firm up in Park City where I learned a ton. I've worked in industry. I worked for Invest Tools as their tax manager.
Shoot, you've done it all.
And I've been the tax director for Vivint for about 11 years.
Wow.
And that's where you're currently at?
Yep.
Nice.
That's where I'm at now. I'm the head of tax there, and then decided to get a side hustle and help my neighbors with some taxes after talking with them. And the most I've saved one client was $67,000.
Wow.
Oh, shit. But I'm not gonna lie. I love extra cash in my pocket, and I know where to put that money.
Yeah.
Into fun stuff.
Well, and for me too, like this. I mean, last year was my first year, using you as a CPA, or anyone as a CPA, and I think for me it was more like emotional. So you don't know what you don't know. And I think a lot of entrepreneurs are terrified of the big bad Uncle Sam government because they don't know the rules. They don't know if they did it right. I mean, I did my own stuff on TurboTax and probably did a lot of stuff wrong. And I think there's this looming thing over the head of some entrepreneurs of just I'm screwed, I'm screwed. And having you, it was $500-600 I think to do my very complicated books. You saved me a lot of money. But more than that, it's that emotional piece that comes through the entire year of just knowing first of all, if something does happen, I have somebody to help me and work through that, which is huge. But second of all, you actually know what you're doing, and so I'm not going to be as screwed as I thought I was the last few years.
Well, it's nice if you can sleep at night, right?
So why is a CPA a good investment for specifically an entrepreneur?
Good question, man.
Yeah, well, what I found most is that entrepreneurs are amazing people. They're high energy. They have ideas. And they'll go from one idea to another, start a business, end it, it's not working, they'll modify it quickly.
They hang out in limos.
Yeah, they do crazy things like drive to Vegas and buy limos. Instead of doing their own accounting. But come on.
We don't want to touch that.
What are you guys thinking? But so what's happening is the entrepreneurs are really fast, but you can't do everything, right? But you have to when you're starting out. You don't have the money, so you're your own accountant. You're your own marketing person, your own insurance specialist. You've got to do it. You've got to do it all, and it's really difficult. And so I think as soon as an entrepreneur can get to the point where they can actually have a CPA help them, which shouldn't be too far along. CPAs are actually not that expensive.
Yes.
They're probably half price compared to attorneys.
Sure.
So I'm biased. I think CPA is a great way to get started. So what I'm finding is just everyone's missing deductions.
Yeah.
They don't know what they're supposed to deduct or what they can deduct, and I don't blame them. That's not their job. They didn't go to school. They didn't, to be CPAs, and they didn't, they haven't done tax returns for 25 years, and so I don't expect that. But like I said, in at least 90% of my clients, they're all missing deductions and at least $3,000. And
what is, I guess, some of the traits that you've noticed among some of your wealthier clients? Are there common denominators you've noticed?
Yeah, I'd say there are two. One of them is they treat people right. They're really fair, and they're really upbeat and positive, and they don't try to take advantage of people. And that way they're creating a network where people are loyal back to them.
Right.
And then I'd say the second trait is where they realize at one point when their skills are better set to be used what they're skilled at, instead of, like I said, they're wearing all the hats, right? There comes a point where they start to make money and they realize that, hey, at this point it'd be better to hire a CPA, hire a bookkeeper, hire someone who's helping with the marketing, and then they can focus just on their skills. And then that's when they really take off, because they're no longer spending 80% of the time on things that are not providing value for them, when they can spend a little bit of money and then they can leverage that, and now they've got their time to themselves.
So I notice a lot of high energy entrepreneurs, they have a lane and they're really good at one thing, and then they're terrible at operations, or they're terrible at the finances, You know what I mean? So I totally see, I can resonate with that, you know what I mean? But here's what I want. I needed some dirty details. What's the common denominator in their cash? Is that something you can talk about? Like, do you see anything that's like, oh, the ultra wealthy are doing this, and I can see it in their taxes or in their books? Like, I know I'm throwing an audible at you, but like, is there anything that you see that's like common, that's like, these guys, we know they have lower tax liability because of real estate or because of...
Yeah, what I have noticed is that they, there comes a point where they take the money that they've earned and they invest it, right? They don't spend it, they invest it. So they're either investing it back into their business or into another business, or they're investing it into, like you said, into real estate. Real estate's a great tax reducer. It really is. It's tax favorable, and so it doesn't generate a lot of income for you, immediately, but over the time with appreciation, that's where you're going to get your reward. But yeah, they definitely take their money. They're smart with their spending. They don't overspend, and they invest it and roll it into new business lines, new ideas, new partnerships, or they just invest it. They've got something put away, and when they're 45 and 50 years old, they've got millions in the bank, millions in net worth.
Can you give? I need some dirty details on this. Donald Trump, right? We know Donald doesn't pay the taxes, right? Do the ultra wealthy, are they doing anything different? Is it just that they keep buying these assets that look like liabilities on their books, or like, what do I have to do to pay zero taxes? I know that's not like, hey, I get all this money and I spend it, but over time, my goal is to make more money and lower my taxes every single year. And I think working with you the last couple of years, I've done that, and I want to keep doing that. You know what I mean?
Yeah.
Is that a loaded question?
Well, no, it's fine. One interesting story is FedEx.
Yeah.
Instead of talking about an individual, but we can talk about a company. So with the 2008 tax law change, they changed it so you can have accelerated depreciation, bonus depreciation. You can write off assets that you purchase at an accelerated rate. And so the New York Times actually wrote a hit piece on FedEx about 8 months ago and said, here's $1 billion company making billions of dollars of income, but yet they didn't pay any tax. They're tax cheats. They're taking advantage of the tax system. And so there was actually the CFO of FedEx actually wrote a reply and said that they were using the tax laws, and when you purchase like an airplane, because of the favorable, depreciation rates in the new tax law, that they could actually expense these airplanes, and they were able to offset a lot of their income. So, that's one example where a legal company legally didn't have to pay any tax. President Trump, has not released his tax returns.
Right.
Supreme Court.
Do you want to see him? Are you curious?
It'd be fun.
I want to see him.
But the Supreme Court's now involved. They're trying to get it. But obviously Trump is into real estate. That's how he's made his money.
Right.
He's got all the towers, the commercial real estate.
Yeah. And so what's nice about real estate is you can invest in real estate and you get to depreciate it. And so usually, even with a smaller individual that maybe owns a rental property, a duplex, or a small apartment building or whatever, you collect your rents. That's your revenue. You have all your expenses, and then you have so usually you're cash flowing. That's the goal, right? Cash flow your property.
Right.
And then, but the beauty of the depreciation is you get to depreciate the property. So, like a residential rental property, you can depreciate over 27 and a half years.
Right.
Yeah.
And so all of a sudden that depreciation expense takes you negative. So now you're not paying tax on the income that you were earning on the property.
Yeah.
And so
Tax-free dollars?
Yep. And so I'm assuming that's what
on paper.
I'm assuming that's what what like Donald Trump's doing when they're building the big plazas, and they've got interest expense, they've got loans on the property, and then they can depreciate it.
Yeah.
And so they can just accumulate their mass, right? Their wealth and their properties.
So I know we're getting close, but what I'm hearing is, the wealthier you are, the more you invest, the more depreciation, the more these type of expenses you try to incur. Is that kind of what I'm hearing?
Yeah, and if you don't, you're going to pay more tax.
So if I just make $1 million as an NFL player and I don't spend it wisely, I'm going to pay more tax.
You're going to pay, you'll be in like a 40% federal state bracket.
Jeez.
Ouch, man.
So,
well,
and it's even a higher tax rates for like someone that's self-employed.
Yeah.
So an NFL player's an employee, and so their employer, their team is paying half of their self-employment tax.
Right.
But if you're self-employed, let's say you own, a carpet cleaning business, a home restoration business, You got a couple of trucks. You know, maybe you have 1 or 2 employees. You're working 12-hour days. You're busting your butt to try to, you know, get a piece of Americana.
Right.
You know, in that situation, if you don't do good tax planning, you're paying 15% self-employment tax. You're probably in like a 20-25% federal bracket. So now you're 40. Then you're like in a 5 to 7% state. So you could be in like a 45% tax bracket.
How about you just take half the money, huh?
Yeah. And so it's,
that's painful.
And so that's why it's important to get a good CPA. I mean, you know, you get a second opinion. Don't just go to one. There's a lot of CPAs that, you know, like I said, 90% of my new clients we're all overpaying taxes, and they had CPAs doing their work.
Right.
So this is the situation where you need to do some tax planning. Maybe is it appropriate to be an S corporation? There's strategies inside a corporation where you can actually save some self-employment tax.
Right.
You know, and there's other things you can do to create expenses and that are completely legal and would get through an IRS audit that people are missing out.
Right.
So.
I know we're kind of rolling into your place here. Tell the audience, how can they connect with you?
Do you want more clients?
Yeah, what I like to do is do a free tax review for people.
Right.
I like the small businessmen. You know, they're not they don't have the resources that the big companies have, and it's really not fair.
Right.
And they have it the hardest, and they have the highest tax rate, the highest burden, the highest self-employment tax rates on top.
Right.
So what I like to do is just do a free tax review. It takes me like 10 minutes, and I can look through their tax return, and I can say, okay, hey, it looks like everything's pretty good. You know, you've got a good CPA, or you're doing things right. You know, I just keep going. Or I can say, hey, these are the 3 areas that I see you're missing.
Yeah.
And at that point, it's just up to you, right? You know, up to that person to see which direction they want to go.
But we're generally talking a couple $100 a year, right? I mean, for taxes.
To do a tax return, most CPAs are pretty standard in fees. You know, to do a 1040, it starts around $250, $300. It goes up based on, you know, what you have involved.
Sure.
To do an S corporation return or an LLC, you're probably looking at anywhere from $500 to $700 starting.
But that's still
worth
it.
If you think about the $12,000 that you saved the gentleman, he would gladly pay $1,000.
So, I mean, if anyone wants to get in contact with me, they can email me. My email address is jctaxinc@gmail.com.
That's easy to
I'll
remember,
put it up
man.
on the screen.
In the description there.
And just reach out and say, hey, I'd like a free tax review.
Can you do taxes all across the nation? Is Utah only?
Yeah, I've got clients in Maryland, California, New York, Arizona.
Okay, thanks, man. Thank you so much.
Thanks, you guys.
My man.